Right, this is gonna be a very quick video. I just want to go through the NQ, the Nasdaq trades that I took in the previous week, just to kind of see, how everything's been for me. I'm currently doing an Apex 50K challenge, and these are quite some of the first few trades that I took, and that's what I'm going to be covering this week. So I'm just going to be talking about my win rate, the setups, the setups that I used, go through a few trades that I took, and some of the lessons that I learned, because it was quite a bittersweet week, but I do believe that we can learn a lot. So quick shout out before is if you're interested in more of these videos, do well to subscribe, comment, like, and share for more videos. I don't really have like a schedule for now, but I do have a lot of content that is jam-packed for this channel. So in total, I took 2 trades with a win rate of 50%. I took 1 win and 1 loss, and I'm just going to be breaking down the trades in the next few seconds, and yeah, we'll see. Let's get right into it. So first things first, I took 1 trade on NQ. That was on, that was on, let me try to see. That was on Wednesday, yeah, Wednesday 30th of July. That's when I took that trade. And so basically, what I was looking at from the beginning was I noticed that on the daily time frame, we had just come from minor liquidity, internal range liquidity, as well as the daily candle opened above the previous day's open price. So basically that was Wednesday, and it opened above Tuesday's opening price. So that's something that I generally do before I go into any market, be it forex or be it futures, indices, or whatever. So basically that's what I saw at first, and I also noticed that Tuesday created the high of the week. So that's something that I had to note before going into the entries and everything. So moving on to the 1 hour time frame, I noticed that this new week opening gap price previously traded through it and failed to close below it, and it traded back above the new week opening gap. That's when Tuesday created the high of the week, and then Tuesday traded back down. Notice the bodies of the candles are not really closing below the new week opening gap. So for me, that was something that's immediately was saying we're interested in bullish prices, because we traded back into this new week opening gap twice and we still failed to displace it. So already that was speaking volume to me. So essentially right before the market open, you can see that eventually the bodies of the candles were saying about the consequent encroachment of this new week opening gap. So that's something that really spoke volume to me and gave me more confirmation for the high prices that I was initially looking at. And so if we drop down to the 15-minute time frame, we can see much more clearer price action. You see how price traded back into this new week opening gap and then failed to close below it, and then it just immediately pushed up, and that was something that gave me more intel, because the 15-minute was obviously much more clearer, so it gave me more intel to what I was looking for before. So essentially we can see the candles come down back into the consequent encroachment, down, it fails to close, goes back up. Right before 9 a.m. the candles just remain at the consequent encroachment. So that was already volume for me. And moving on, obviously now at this point, going into the New York Open, I'm in my head and I'm like, rah, if I'm bullish, I do want to see a sell-side liquidity sweep, you know? So that's exactly what price printed. And I told myself that if we get that sell-side raid below, sell-side liquidity right before or just after the New York Open, I'm definitely gonna go in for long positions. So essentially, it was just a confirmation for me that at 9:30, we see price immediately opens and pushes below. So it does push below these relative equal lows, as well as this, where you see the yellow line is a low that was from a much higher time frame. The price also rated, and that was exactly what I was looking forward to. And of course, as I usually trade, I have 3 playbooks that I use. And for this particular trade, I ended up using my inversion of the first presented fair value gap. So essentially, we have that sweep at the 9:30 open, wait for the first presented fair value gap to form. Now that I know that, okay, everything we've come from higher time frames and prices saying we're bullish, we want higher prices. That's already speaking volume to me. And I go down, wait for the first presented fair value gap to form, and then wait for price to trade through it, and wait for a candle, a bullish candle in specific, a bullish candle to close above that. And then that was the trigger that I got, and I entered at market open. Essentially, I was targeting these highs, and price did get there. You can see I placed a market order here, and I was targeting these highs. That's relative. And you know, essentially, when I was looking at this trade, in my head, I was like, prices just made this area jagged. So the next thing that I was looking at was, where are the smooth areas the price is left to what liquidity has just been taken at the market open. So that is why I had these relative highs as my first essentially hanging fruit, and that was the trade that I ended, and that was the trade. So basically, here are the stats. This is the trade that I took. I made a little over $500, and yeah, let's move on to the next trade. Right, coming in at trade number 2, you can see Wednesday's candle, the previous trade that I took. So basically, this is now Thursday, the day before NFP. You can see that Wednesday's candle is just right here. You can see it closed bullish. And going into Thursday's trade, I was essentially again looking for bullish prices. I was looking for higher prices because essentially the Nasdaq has, you know, as we all see, the Nasdaq has been on a very, very bullish run, you know. So I expected for price to continue with the same momentum as we went into the new NFP day. Had a huge bump of price above the previous day's obviously open price. We had a huge pump, and at that point that was the highest high that the Nasdaq had ever recorded. So essentially price had opened way above the previous daily high, and you can see that the jump was very, very massive. If we go on to the 1 hour time frame, we can see that we had that raid of liquidity. And we also had this new day opening gap. We have this new day opening gap, and it could also potentially be a draw for our session, and able to also mark out the previous day's high, which we can see that prior to the New York Open, we had that previous daily high taken out. and we had the previous daily low intact. I know so many people are gonna say, oh, if you had the previous daily high, why didn't you, seek sell side? Why wasn't your entry bearish? But we'll get to that in just a few minutes. So you can see that we had a huge bump above. We had the new day opening gap, as well as this large internal range liquidity in form of buy side imbalance, sell side inefficiency that was left open. Moving on to the 15-minute time frame, I noticed that we took out the previous daily high, created a balanced price range, and we saw how price respected that by just the wick drawing into it, but the body closed way below the balanced price range. So already that was speaking volume to me. Now that I obviously see it, that was speaking volume to me. And I mean, it could insinuate bearish prices, it could insinuate lower prices, but I'm just gonna explain this as I was trading at that time. So essentially, after seeing the previous daily high taking the balanced price range as ICT, I've learned from ICT, as we all know, I'm an ICT trader, and we see price respect the balanced price range and then push back, trades back into the previous taken high, and then that was where it was, hadn't opened. So we see at this point I was watching the previous daily high, if price would displace above it, but with a bullish candle and price respecting that by closing above that price. So that was what I looked at the 15-minute, and this was now my entry time frame, the 1 minute time frame. So essentially we can see that market opened and we had that low, we had the new day opening gap traded through, but the candles didn't displace, and then we had the first presentation created, we had the first presentation fair value gap created here, and that's not my model, so I had to wait for more intel to be printed and to be given to me. So immediately after the market opened, we see, because essentially what I trade is when the market opens at 9:30, it is always 80%, it is always a way of stripping out traders who are on the wrong side, or even if price does want to go in that direction, there's still gonna be a significant amount of traders that are gonna be tripped out at open. So I usually use that one-sided movement as a trap for traders, and then use the liquidity that they have taken out as price made that opening sharp movement. I use it to go the opposite direction to where price initially wanted to go. So when I saw this and I saw that the market was really bullish, and 9:30 opens and we have this massive sell-off and we have all this stuff that are taken out, and what even made it better was the fact that we traded into the first presented fair value gap of the previous days. I saw that the bullish candles immediately reversed, and immediately in my head I was like, okay, this is probably gonna be our inversion playbook play, and we have to wait for price to trade back into the first presented fair value gap and then close above it. Then I can look for my entry above. So essentially I was looking at this area as a void of sell side liquidity, and price did that. And I remember I even had an alert. I had an alert here above the first presentation for when price traded and closed above it, and you can see that the bullish candle closed above it, and I waited for price to come back to the consequent encroachment of the first presentation, and that was where I had my entry. So I mean, it is what it is, you learn from this. I was just on the wrong side, but even if I was gonna see the setup again, I definitely would take it. And also take note that on the relative on the regular trading hours, we see that price made a huge open. We had like a discounted open that day. And I was also looking at the consequent encroachment of the opening range gap as a draw for the session. And essentially that was what fueled my long position. And I eventually took that position and it ended in a loss, but nonetheless, I was happy to take this trade. I still ended the week positive. I took a loss of 184 bucks and I still ended the week positive, you know, positive P&L. So this one thing that I learned is to stick to my edge. You know, don't be someone that changes your bias after you've come from the higher time frame. I've done this, so I know this. Don't be someone who changes your bias from the 1 hour time frame and then you come into the 1 minute and you're suddenly bearish. You know, follow what your plan is telling you, follow what your edge is telling you, you know. And I didn't take any partials because I just really want to work on my psychology now. So next week, obviously, I'm gonna be looking for, my main aim is to actually look for free quality setups, and yeah, just free quality setups, and journal obviously immediately and before every trade. So that's one of the things that I'm gonna be doing this week as we go into trade. I know this video is long overdue, but I'm working to get this channel up and running. So that was my trades for the week, and I hope for the best as I go into this new week. So that was it for me today. Talk to you guys next time. If you like this content, make sure you subscribe, you know, comment, you know, share this video with your friends, your auntie, your mom, anyone, you know. Peace out. That's it from me.